Good evening. It is time for today's tax talk. I'm your host. I'm Attorney Leahy. It is Wednesday, January 19th, year of our Lord 2022. A lot of stuff out there about this Cash App stuff. You know, what's taxable, what's not, how are you going to get it for 1099K, who's not. I'm still doing the research on it, and I want to share that with you. So won't you join us? And of course, when I say us, I mean me. So you're going to join me out there. Okay, so again, I've been up in arms about this Cash App, and I'm reading all of these articles as I mentioned. You know, I get the alerts and I read them, and some are telling me one thing and some are telling me another. And so on this program, I've gone through and I looked up the IRS, and I walked you through what they were saying, and we went through the web pages, and we saw what a payment transaction meant, and I kept seeing these articles telling me about things that I thought were wrong, and so I thought, well, as an attorney, which I am, so what do they teach me in law school? Well, here's the thing: start with the statute. Always start with the statute. Problem is, like, what is the statute? Where do you find that statute? And so, but before we do that, I'm going to first read this public announcement from PayPal. So let's start there, and we should be able to start there. Let me see. Yeah, we should be able to start there. Okay, let's start there. And this is from PayPal. New U.S. tax reporting requirements. Your questions answered. I don't think they do a good job, but here we go. How these new taxes reporting changes may impact you when paying or accepting payments with PayPal and Venmo for goods and services. Because remember, Venmo is owned by PayPal. Recently, there have been some questions regarding changes to upcoming U.S. tax reporting requirements. This was in November. That could impact the information PayPal shares with the Internal Revenue Services about transactions made using PayPal and Venmo for the sale of goods and services. While a lot of questions still need to be answered, and in some instances legislation finalized and signed into law, we've answered some of the most pressing questions below, and we'll be sure to keep the list updated as more details are finalized. So as I mentioned, last week I did this, and we went through the IRS website, and I kept reading they've changed the IRS website because it's updated now about things that are in the bill. So we're going to talk about that in just a moment. Will I have to pay taxes when sending and receiving money on PayPal and Venmo? What exactly is changing? The answer is we need to break it into two specific areas which are currently being discussed by Congress. This includes lowering the reporting threshold for goods and services transactions on 1099K, as well as potential changes to how financial institutions report inflows and outflows of money on customers' accounts. Here's a quick summary of both. Here's the 1099 that we've been talking about. The new threshold change is currently only for payments received for goods and services transactions. So that doesn't include things like paying your family or friends back using PayPal or Venmo for dinner, gifts, shared trips. This change was introduced in the American Rescue Plan. Okay, so I went and found the American Rescue Plan. This is not the American. So, I know where let's go back here. Went and found the American Rescue Plan. Here it is. Here's the American Rescue Plan. And so I had to go to the American Rescue Plan. Well, where is it in here that talks about these things? Right, and so it general health, and so you see where it gets kind of complicated. Housing provisions, it's in here somewhere, believe me. Earned income tax credits. Well, what did I? Let's find it. So, transaction. Transaction. Let's see if there's another one, because that's not it. Okay. I had it. I did have it. Okay, so let's go back. This is the law. If I go to the American Rescue Plan, they tell me I should go back to the they tell me I should go back to. It tells you exactly where they changed the law. So let's see if we can get. Let's see if we can find $600. 600. Let's see. Here it is. Section. What did I just do? It says section. Here, let's see. Oh, shoot. Why is it doing that? So here it is. Let's get rid of this so I don't. Modification or exception to reporting of third-party network transactions. Okay. Section 9674 of the American Rescue Plan. So in general, Section 6050WE of the Internal Revenue Service Code of 1986 is amended to read. So that's the code. So that's what it's telling you. Well, we're in this section 9674. We're amending a section in the IRS code, Section 650W. Okay, so let's go to 650W. That's where we should start. So here's Section 650W. Returns related to payments made in settlement of payment card and third-party network transactions. Okay. So where does it tell me it's changing them? Section E, de minimis exception for third-party settlement. So we go down to Schedule E. And this is what changed. It used to be $20,000 and 200 transactions. And now it reads, a third-party settlement organization shall not be required to report any information under subsection A with respect to third-party network transactions of any participating payee if the amount which would otherwise be reported under Section A2 with respect to such transaction does not exceed $600. So they changed the de minimis, right? So they said used to be 20,000 and now it's 600. Huge difference. Okay, so then it talks about, well, under Schedule A2. So what's A2? So let's go up to A2. The gross amount of reportable payment transactions with respect to such payment payee. So that's payment entity. So let's look to see where this is now. They changed the reportable payment transactions. What is a reportable payment transaction? Third-party network transaction. The term third-party network transaction means any transaction, and it used to stop there, any transaction. But now it says it described in subsection D3A, which is 3, D3A3, which is settled through a third-party payment. So now we have to look at D3A3. And here's D. Let's go down to 3A3. Third-party payment network. The term third-party payment network means any agreement or arrangement which involves the establishment of accounts with a central organization by a substantial number of persons who are unrelated to such organizations, provide goods and services, and have agreed to settle transactions for provision of which goods and services pursuant to such agreement or arrangement. Okay, so that's now, so 3D3, have agreed to settle transactions for provision of goods and services pursuant to such agreement or arrangement. So in a round robin way, they're saying, oh, only, and that's where everybody's kind of hanging their head on this. Only goods and services. Okay, so if that's true, let's go back to Where's my PayPal? There it is. Okay, so will the updated 1099K threshold apply if I sell personal property like a couch or an item at a garage sale for $600 or more if it was sold for less than the original value? Will I see? But they're not saying what if they sold it for more than the original value? Well, then that would be a different rule, wouldn't it? Form 1099K is an IRS informational tax form that is used to report goods and services payments received by businesses or individuals in a calendar year. While banks and payment service providers like PayPal and Venmo are required by the IRS to send customers a Form 1099K if they meet the $600 threshold amount, there are certain amounts that may be included on the form that are generally excluded from gross income. Let me read that again. Like PayPal and Venmo are required by the IRS to send customers a Form 1099K if they meet the $600 threshold amount. There are certain amounts that may be included on the form that are generally excluded from gross income and therefore are not subject to income tax. This includes amounts for selling personal items at a loss, amounts sent as reimbursement, amounts sent as gifts. Okay. So, for example, and now they give you a bad example. What if I sold a couch for $1,200? What if I bought a couch for $1,200? I sold it for $800. This amount would not be subject to an income tax. Okay. So, but see what they're saying here? There are certain amounts that may be included on a form that are generally excluded from gross income and therefore are not subject to income tax. This includes amounts for selling personal items, amounts sent as reimbursement. So if I give somebody money back for dinner, or amounts sent as a gift. So they're telling me, PayPal's telling me, these are probably going to be reported. Well, and then we go back and say, well, wait a minute. Those aren't supposed to be reported according to the law that you just stated, Attorney Leahy, right? Because this is only for goods and services. They keep telling me that. It's only for goods and services in a round robin way. Remember, they don't say it straight. They don't just say goods and services. They just added it as part of D1, D3. Okay, so they want it in a round robin way, not to say it. But people are interpreting it to say that. But PayPal is acknowledging you're going to get a 1099K, and this is the important part. Okay, this is the important part. The 1099K. Okay, they say, well, you're not going to get it. It's not going to be reported on your 1099K. But what people don't realize, the IRS is not some, they're not some wishy-washy organization that's going to, gotta let you kind of skate through. Okay, let's remember what the purpose of this is. The purpose of this law and this rule, from changing it from 20,000 down to 600, the purpose is to find people who are not reporting income. And so if all I had to do is say, you know what, this is not a product or service, and so now it's not going to be reported. That's just because what people don't here's what you don't know. And this is that there are penalties to the payer. So PayPal, Venmo, Zelle, all of these, if they don't provide you with this form when they're supposed to. Okay, so how many thousands or hundreds of thousands of people are going to say, well, they shouldn't get a 1099K? Well, a lot of people. And if PayPal or Venmo doesn't send them, the minimum that they're going to be charged is $50 penalty per person. Right? Per person. That doesn't include some other penalties that would be, but they're going to be just for not filing it. Okay? And then there's what they call backup withholding. And so this is another way that the IRS has to gather money from you. Okay. And so it's like levying your bank account. So you owe the IRS money. Well, they can go after your bank account. Well, now, even if you don't owe them money, because what happens if I keep reporting my income and taking not taking enough money out of my W-2. And every year I owe the IRS, and every year the IRS will send a letter to my employer saying, hey, you know what? Take more money out of him. It's called backup withhold. Take that money from him. Take at this, and they'll set the range, how much they want that you must take. Your employer must take this much. They won't let you claim zero or anymore. Okay. And so here you, if you're a taxpayer receiving certain types of income payments, 1099-Ks, the IRS requires the payer of these payments to report them on an information return, 1099-K. The person or business paying you doesn't generally withhold taxes from these types of payments, as it is assumed you will report and pay taxes on this income when you file your federal tax returns. There are situations when the payer is required to withhold at a current rate of 24%. It's now 28%. This 28% tax is taken from the future payments to ensure the IRS receives the tax due on this income. This is known as backup withholding and may be required if because you failed to provide a correct taxpayer identification number to the payer for the reporting. So what's going to happen here, and I think let's go back to PayPal. PayPal is telling you what is goods and services payment with PayPal. Both PayPal and Venmo offer a way for customers to tag their peer-to-peer transactions as either personal, friends, and family, or goods and services by choosing the appropriate category for each transaction. Of course, when it's a business transaction, they charge you. There's a fee. When it's friends and family, then there is no fee. And so when people are selling things to people, or if I'm painting someone's house and they say, hey, how do you want me to pay you? And I say, pay me on Venmo, but don't pay me as a business. Pay me, just send it as a friend or family, because that way I won't have to pay the fee. I'm not talking about taxes. They can still report it on their taxes, but they're not paying the fee. So peer-to-peer transactions as either by choosing appropriate category for each transaction. Users should select goods and services whenever they are sending money to another user to purchase an item, like a couch from a local ad listing, or concert tickets, or paying for a service. These transactions are also eligible for coverage under PayPal and Venmo's Purchase Protection Program. Goods and services are designed to provide both buyers and sellers peace of mind, knowing that they both have covered in the transaction doesn't go as expected. You can find out more about so let's think about this. Do you believe that the IRS is going to let you, the taxpayer, decide what is a goods or services? The answer is no. Right? That's the whole point of their doing this, is because they think everybody's lying, and they're trying to catch the liars. And so they're not going to let you keep lying, and whether it's the truth or not, right? So they're going to make you prove it. So that's where that comes from. And so let me go back to this, because is the 10? It's not specific. When do these changes take effect? We know it took effect January 1st. What is a Form 1099-K? Form 1099-K is an IRS informational tax form used to report payments received by a business or individual for the sale of goods and services. They were paid via a third-party network, often referred to as third-party, credit card transactions. The IRS requires these organizations to issue a Form 1099-K, which shows the total amount of the payers received in the calendar year. Taxpayers should consider this amount with their tax advisor when calculating gross receipts for their income tax return. For more information, visit the IRS website here. What do we need to do with threshold takes effect? Haven't I always had to declare my income from sales of goods? What's different? Reporting and declaring any income, either personal or through a business, has always been a requirement with the filing of your tax returns. And I've said that. That's right. From whatever source, right? That's what the 16th Amendment says. From whatever source derived. So it's always been taxable. The change broadens the scope of reporting such that PayPal and Venmo need to collect tax information once you near or reach $600 in goods and services transactions, instead of the prior threshold of $20,000 and 200 transactions, so that we can remain compliant with our regulatory requirements and share those details with the IRS. This change impacts every financial institution and them, and you might use to transact for goods or services, not just PayPal and Venmo. This includes your bank accounts. Okay, that's that bank reporting that hasn't passed yet. So let me see in here, because they talk about coming after and asking you. We're going to ask you for your tax information. Let's see if they. The taxpayer identification number. Here it is. What information do I have to provide to PayPal or Venmo? What do I do to ensure I remain compliant? In the coming months, we may ask you to provide tax information like your employer identification number, individual tax ID, or social security number. If you haven't provided it to us already. For background, generally businesses use an EIN, while sole proprietors and individuals use an ITIN or social security number. So, and why will they do that? Because if they don't do that, then they're going to be facing penalties from the IRS. I had an IRS. I didn't put it up here. I had an IRS opinion from 2011. Remember now, this all started in 2011. And so there was a lot of questions about this, about these regulations and penalties to these organizations like Venmo if they didn't comply. And so the IRS has come out with many opinions about what is reportable, what is not reportable, and who has to file and who does not have to file, and then who is responsible and who is not responsible. And here's things about the backup reporting and all of this. So anyway, so while they did change it to say in the statute in a round robin way, it does say goods and services. And that's why everybody keeps hanging their hat on this. And again, you have to go back to the statute, read the statute. It's not that clear in the statute. Let me see if I go back to the statute. Okay, so it's not that clear in the statute about what is a goods or services. What is, remember, it's it's D3A3, have agreed to settle transactions which involve I'm just going to read this again because it's that important. Third-party payment network. The term third-party payment network means any agreement or arrangement which involves the establishment of accounts with a central organization by a substantial number of persons who are unrelated to such organization, provide goods and services, and have agreed to settle accounts for provision of such goods or services pursuant to such agreement or arrangement. Well, PayPal has done that. Whether you're doing goods or services or not, PayPal has done that, right? They fit into this third-party network, right? So they do. And then here's the de minimis what it is. A third-party settlement organization shall not be required to report any information under Section A with respect to a third-party network transactions of a participating payee if the amount which would otherwise be reported under subsection A2 with respect to such transactions does not exceed $600. So again, they could have put in there is not for business goods or services, but they did not do that. And so we have to go back up to the definition. A reportable for purposes of this section, and I'm just a third-party network transaction. The term third-party network transaction means any transaction described in subsection D3A3, which is settled through a third-party payment or network. So that's what a reportable payment transaction is. Is it clear that No, it isn't. And here's what I've been dealing with the IRS a long time. And what I found is that whenever the IRS can make it that you have to report something, they're going to make it that you have to report something. Anyway, that's where I'm going on about this. I just wanted to update you and let you know. I'm still looking into this. I'm going to bring you all the tax news I can. I'm not trying to tell you something that's not true. Okay, but I also don't want to tell you something that is not, that people tell you is true and then is not. Right. So here, there's good news it is in there somewhere. There's bad news that there's lots of penalties for the organizations that don't do it, and there's ambiguities, which I just showed out to you. So again, there's good news in that it is in there. They did change something for goods and services, so there is something to hang your hat on. Whether the IRS lets you do that, that's a different matter. Okay, so that's what I just want to get that through, and I want to make sure that everybody understands this. Okay, so first I want to ask you to like and share. Please like and share our content. It's that important. I need you to do that so people can find me, and I think it's important. Got a good call today. Someone ordered a book from me today. Deal with your IRS problems today. They went to freeirsbook.com and ordered a copy. And then we texted back and forth because I wanted to tell them that they got a copy. So go to freeirsbook.com, get yourself a copy. So thanks so much for joining us here today, and we'll see you again very soon. Thanks again.